Hi, it's Nick Stewart again from Exclusive Hot Properties, and today we're going to talk about something quite exciting, our passive income real estate and investment overview for May 2020. Anyway, thanks for watching. Very simply, we'll start by what is a passive investment. Okay, very simply put, a passive investment is an investment, it's a bit like an armchair investment in the fact that as an investor, unlike buy-to-let properties, you don't actually you put your money in, you sit back, you let the developer manage the asset for you, you get a return on your investment. And basically, in most of our case in Exclusive Hot Properties, we tend to market guaranteed passive investments. So there's two types of passive investments. One where the developer will give you a guaranteed return, so you know what your return is. They will also give you a guaranteed exit strategy by the way in form of a developer's buyback. And the alternative to that is a passive investment where they'll give you a share of the profits, a share of the rental income, however it happens to be, depending how many people coming out. Personally, they're not the passive investments that I would recommend to our clients, but some people like those. So, for example, in the Philippines, all the major developers, so if you want a major developer, with a AAA ranking, etc., they don't offer rental guarantees. They believe as a developer, they don't need to do that. However, right in COVID-19 times, you'd be in a very bad position if you'd invested into one of these type of investments. Okay, so what type of passive investments are there? Okay, in very simple terms, there's about 3 or 4 major ones. The first one being a hotel room investment. Secondly, being student accommodation. Thirdly, care home investments. And fourthly, resort villa type investments, which is similar to hotel room investments. And then you have just simple condo investments, i.e. condos that are the apartments, if you like, that you've basically bought, you own, but you've leased it back to the developer, and the developer will then rent them out and pay you a guarantee. Okay, next you probably want to know what sort of guarantees are in place. So this differs quite considerably between project to project, developer to developer. And as a company, Exclusive Hot Properties, we're primarily focused in our best assets are in 3 major markets: the Philippines, Thailand, 4, and the UK. Those are the markets that we're in. But generally, we are seeing rental guarantees or guaranteed returns of between 7 and 12%, and then it depends on the investment, the developer. Also, in some of our investments, which we'll go into later, there'll be benefits in kind. So in some hotel room investments and resort style investments, the developer will give you 30 days free usage of your asset, and that can actually be very nice. If it's a 5-star luxurious resort, that can be very nice. But also it can be it can add another 3% to the value of the investment. So you could theoretically give that back to the developer in exchange for some rental income, or you could use it yourself. And a lot of people in our really high-end 5-star beachfront luxury resorts prefer to keep the lifestyle element for themselves. So that's more or less a passive investment for you. And now what I'd like to do is discuss the different types of passive investment returns that you can get from different sources. So for the purpose of this exercise, I've taken two developments from two very, very good developers, one in the Philippines and one in Thailand. So the highest return comes from a project that we have, which is beachfront in El Nido, which is a very, very strong tourist destination in the Philippines, where the developer is paying 10% rental guarantee for the first 5 years guaranteed. Plus, if you pay cash up front, he will give you cash back equivalent to the rental guarantee of 10% per annum. And he will also, after 5 years, give 120% buyback rental guarantee. So if you add all those factors, that's 190% return over 7 years. The developer will also give 30 days free usage, which is again worth another 3.5%. So if you add all those factors up, you're almost at 16, 17% return on your investment. Then you start to look at the developer and the development team. So this development team, it has a very, very strong team. Savills, KMC, the Philippines brand, is the project manager. They have managed very many big projects like the Okada Casino. So it's very, very strong. And the end user or the end manager, Pavilions Hotels, pavilionhotels.com, which you can Google, is a very strong brand. They own 3 hotels themselves, but they manage various other hotels, 5-star luxury hotels around the world in places like Bali. And they have places in Lisbon, Hong Kong, and Thailand. So that's a pretty good investment, and it's one of our best investments. Then, by comparison, we have a project in Thailand, and Thailand's very, very interesting because I'll go into more detail in the blog, but there's been quite a few developers who, since COVID-19, have not been able to pay their rental guarantees because basically they've had 90% occupancy and gone down to 4% occupancy. And you don't have to be a great mathematician to work out that you can't pay your rental guarantees if you have no income. And obviously they're trying to protect their balance sheets by not paying their rental guarantees. However, one of the great things about a passive investment is even if you're with a company that's not paying its rental guarantees now, they still have a contractual obligation to pay you. And if they don't pay you, you can enforce it, and if you don't enforce it, you still have the security, right? So the developer would have to be going bust for in the hundreds of millions basically if they're not paying their guarantees. So anyway, I come to the point. We've picked a company, a development in Thailand, from one of the few companies that is actually honouring its rental guarantee. They have a strong balance sheet. So the great thing is if they can pay their rental guarantees in COVID-19 times, you've got to be pretty sure that they're going to be able to pay their rental guarantees at almost any other time. And that, as you would not surprise you, they're doing great business at the moment because they are a safe haven in a COVID-19 storm. However, when we compare the like with like, their investment returns, because they don't need to be, aren't as good. So generally, they will pay 8% rental guarantee, guaranteed for 5 years, and 100% buyback, not 120% buyback after 5 years. But the 8% is also subject to 15% withholding tax, which you have in Thailand, whereas the investment we've just mentioned in Philippines is paid out of Labuan and is tax-free. So what this actually means is you get 6.8% a year, plus you have the 100% buyback after 5 years. They will give you cash back equivalent to your investment if you pay cash, very similar to the Philippines investment. So when you add all these elements up, you're getting 147% return. You're getting 7 days usage instead of 30 days usage. So it's maybe worth a couple of $1,000. Maybe it's worth another 1% on the investment. But as you can see, The return is almost half of what the Philippines return is. However, it's as close as you can get to a guaranteed treasury bond return, right? You might actually say in this current market, it's probably stronger than borrowing from some of the banks out there. So your money's really, really safe. It's a great place to park your money. And there is no, I mean, as close to no, there's not such a thing as no risk as we've seen with COVID-19, but it's closest to a no risk investment as you're going to get, and somewhere good to park your money. Or you go to the Philippine project, which is a fantastic project, lifestyle, everything you probably want, and return double the money with a little bit more risk, because obviously this the issue with this developer is it's pre-selling, it's pre-contract, and this is the first. Even though the management team has lots and lots of experience and built lots and lots of projects, it's the company's first project. But if you ask me which one I would choose, I would probably choose the Philippines investment, because I just think it's a fantastic return and it's very, very minimal risk. But if you're really somebody that's completely 100% risk averse, then I would pick the Thailand project. So I go into more detail of this in the blog, but I think it's pretty exciting times, and passive investments are really, really a good place for your money at this time. You're getting, as I said, 3 levels of protection. You get the actual rental guarantee, you have the security, and you have the developer, which you don't necessarily get in a buy-to-let. So a buy-to-let, you lose your tenant right now. If you lose your tenant now, you're not getting any viewings. You're probably not getting a new tenant until September. Right. Well, I hope that you found this this video blog about passive investments interesting. If you would like any more detailed information, and you'd like our guide to hotel room investment, passive investments, happy to send those to you. After the blog is finished, you'll see our contact information, and do please feel free to contact either myself or one of my team. Great talking to you, and I hope to be in personal contact with you very, very soon. Thank you very much.